Everyone, myself Vaibhav. I welcome all of you to today's session of Visual JForex, in which we are going to talk about an indicator which is based on the moving averages, and this is a transformation of the simple moving average indicators, and now we are entering into a phase where these indicators are getting complex, and today's indicator, the MA, which is the MESA adaptive moving average, is one such indicator which we are going to see. So here we will first see the description, how it is calculated, and then we will see how we can utilize this indicator on the Visual JForex platform to build an profitable algorithmic structure to make sure that it will continue to trade even if we are not in front of the screen. So far we have done these indicators which were based on the moving averages, and now it's a turn of MA. So from this short description you can understand that there is a trend following indicator, and the added point is that it quickly adjusts and adapts to the price movement, and that is one of the plus point here, that this indicator will be taking into account the momentum of the underlying instrument, and to kind of reduce the lag, it is introducing the features, and that is the rate of change of the phase as measured by the Hilbert transform discriminator, and this method also adapts the features of fast and slow moving averages, and it combines that with the composite moving average to get a quick response to the price change, and that's how it is better in a way compared to simple moving average. But of course its use is going to be dependent on how you perceive it. So what we do is we will see the block of this indicator, and I will try to explain to you how we can configure it. So this is the MA. This is the Visual JForex board developed by the Dukascopy Bank SA, so that we can use this platform to build the automated trading algorithms and then run them on the the JForex platform, and it will trade on our behalf just the way we wish after we design and implement this structure. We will also add this indicator on the JForex platform. Okay, so here is the chart for the MAMA. It has two components, the fast and slow moving average components, the FAMA and the MAMA. The signal here, the slower one is FAMA, and this yellow one is the MAMA, and this is the formation. It can be used multiple ways. One is that a simple crossover structure, bullish cross or the bearish cross. We can simply use these crossovers as the trend signals, change of trend, and possible reversal, and the entry point. Otherwise we can also use this combination to act as a support or resistance, and that way also it is going to be helpful. Or else we can simply use this indicator to gauge the momentum of the underlying instrument. So if both of these outputs, the MAMA and the FAMA, are on the rise, that will be indicative of the fact that the price action is in the bullish phase, and if the price action is on the bearish phase, then we will have the values for FAMA as well as MAMA going down, falling, and that will be the time to get involved for the short selling trades. Now coming to the block, here you have to define these parameters. First is the default instrument. You can change this and choose any of the instruments supported here. So you have this freedom to develop the algorithm on any indicator, on any instrument of your choice. For the day, let's change this to AUDUSD, the Australian dollar versus the US dollar. Here also we will change that and bring in the AUDUSD, and here we are. Okay, so as you can see, the price action has been on the rise. It has been in the bullish phase, and that is also being reflected in this momentum, which is being reflected in this combination of MAMA and FAMA, and both of these output values are on the rise, as well as starting from this crossover. We have also seen these lower line acting as a support, near-term support here, and then the upper line has been acting as a near-term support during this consolidation phase, and then again the move on the higher side. So this is the indicator, and you can use this in multiple ways. So you have to figure out the combination which is likely to prove profitable for yourself. So for today's session, we are using the AUD/USD as default instrument. Now comes the question of the time frame, the time period for the candlestick. Now, for that you have to see what kind of combinations are likely to prove profitable, and choose one of those. So suppose if you want to lower these or increase these, that can be done. All you have to do is the appropriate time period for candlestick, and the MAMA indicator will work equally fine in all these conditions. Now again, coming back to the change which we need to do here, we have to take now 15 minutes. Okay, 15 minutes we got. Shift is the look back period. Shift is the value using which the retrieval of the output variables will take place. If the shift is 0, then that will mean that current output value will be taken into account. If it is say 3 or 4 candlesticks back, then the value prevalent at that point in time will be taken into account for any condition to be defined or for any calculation to be done. Now comes the next level, and here these are crucial values, you can say critical values, and here we are actually providing a kind of gradient, or you can say coefficient, and we have to multiply this. We have to use this fast limit and low limit. So here, even on the chart, you have to define this. We get this freedom to make sure that we are after the best possible structure for algorithm development, which can hold well regardless of the market conditions. Now coming to the close price here, the input is the closing price, which can be changed to any of these options: the typical price, median price, or the weighted close price. For example, let's go with the low price. Now here you can change this, the fast limit as well as slow limit, and let me show you some of the changes that will be apparent as soon as we change the value. Keep in mind this default value, that is 0.5 for the slow and 5 for the fast. Now when I change this slow one also to 5, the shift has happened here, and we have a lot more smoother moving average compared to the earlier one. But still, it is doing an excellent job if we were to look at the crossover thing whenever there has been a cross. But also I think almost twice we get the break on the lower side, but the price action doesn't really follow suit, and again the reversal happen after some time, and such instances will of course happen. So what you have to do is define good enough stop loss, and then just leave it to that. If the stop loss is hit, that's it, end of the story. And if things go out well, then you make merry. So that's how I think it should be. So here we have this combination for adaptive moving averages, the MESA adaptive moving averages. Now we have to define all these variables, and I have just shown you if we simply change this value, input value, then also that will result in a big change in the output value, and that's why we need to be careful. But so far, as I am able to see from the chart, though here the reversal happened pretty early, and at that point in time I don't think many people have the idea. So in such instances, what we can do is we use multiple combination, and then see which combination works best, and also we have to now see some of the settings which need to be defined for the MAMA, and then I think we will take into account the price on which the MAMA needs to be calculated. So here the output values MAMA 11 and FAMA 11. So we can use this combination, as I said, whenever there is a cross from below to on the high side for MAMA. That will be indicative of the fact that bullish momentum is picking up pace, and similarly for the sell trade, it will be indicative of the fact that bearish momentum is taking hold. Now the next thing on the agenda is to try to adapt these settings, and it really depends on which side of trade. Personally, I prefer the buying to be done, the buy side trades to happen when there is a bid on the apply side, but for short sale I think the offer price should be on the ask side, and that will give you just little bit tiny amount of price action advantage, as we tend to get the spread at minimum levels. Now applied price, as I said, can be anything from the close to the high price, and it makes a significant difference to how the output value will look like. And here we try the same thing. Output, okay, levels, and that one. If we calculate from the custom data, the instrument is being chosen from the chart, but it is chosen from the chart side. So I think okay, so here is our applied price variable, and from this you have to choose which one you want. So if we choose closing, then some difference has become apparent in the price action compared to the earlier charting. So I think here we stop, and I hope you have been able to understand this indicators functionality. It is fairly simple. I would again try to remind you once that we can use this combination of MMA in multiple ways, and of course it can be in the form of support or resistance, or it can be in the form of just momentum defining indicator, but either way it works well. And also to configure it on the Visual JForex platform is easy enough. So because of that, okay, so here we are. And I hope you have been able to understand these indicators functionality and how to utilize these combination on the Visual JForex platform and develop and build automated trading strategy to benefit from the market. So that's it from my side for today's session. We will be back tomorrow in tomorrow's session for a new indicator, which will most likely be one of the, you can say, one of the same kind, the moving averages, which we have been doing for past a week or more than that. And that's for tomorrow, for another day, for the day. It's time to say goodbye. See you tomorrow.